Hi, my name is John Cash. I am the CEO and chairman of the board for UR Energy. We are a long-term producer located in Wyoming, and we produce from the Lost Creek mine, which is an in-situ facility. We've been producing there since 2013. We're also building out our second mine, also in Wyoming, called Shirley Basin. We're returning in-situ mining back to that facility. That's where in-situ mining was really evolved and developed back in the early 1960s. So we're excited to be bringing that back. Construction is going quite well. We plan to be up and running very early 2026. We trade on the New York American Exchange as well as the TSX.
My name's Andre Liebenberg. I'm the CEO of Yellowcake. Yellowcake is a long-term holder of physical uranium. We IPO'd in 2018 and acquired our first uranium at $21. And over the intervening period, we've accumulated an inventory of just under 22 million pounds. And we hold most of that at the Cameco facility in Canada and some of it at the Urano facility in France. Yellowcake was set up to provide investors with pure exposure to the underlying uranium commodity. We have a contract with Kazatomprom that allows us to buy up to $100 million per annum, essentially at the spot price, and that contract runs through to 2027.
John, Andre, thanks so much for joining us today. We're going to talk about the macro thesis for investing in the uranium space, and you're both coming at from slightly different angles. I thought that might add a little bit of color to what we're doing today. But Andre, you've just returned from a conference with the great and the good. What were the big talking points?
I think, everyone was looking at the supply-demand charts, and whether you look out to 2040 or beyond, the point is that demand is looking increasingly more robust. We've gone from sort of energy carbon neutrality to energy security, and now energy independence and energy sovereignty. And nuclear is starting to play a role in all of those themes. But underpinning all of that, and really, what should be of concern to the utility, certainly in the near term, is the supply side. The supply side takes a long time to get up and running, and no doubt John will talk to that. You can't flick a switch and magically the uranium comes. So whilst the demand side is looking increasingly more robust on multiple fronts, the supply side, I think, was highlighted over and over again as a challenge.
What about you, John? I mean, obviously, as Andre says, we've talked about it ad nauseum. It is difficult. The people with experience aren't there anymore. This is a very technical metal. So, what do you have to add to that?
Yeah, Andre is spot on. And yeah, we've talked about this before. That is the fundamental story in the industry. I mean, there are probably 24 contributing factors to the story, but there is a gap between supply and demand. Demand continues to expand. We see China approving reactors right and left. They just approved 10 more reactors there. Other countries around the world are approving reactors, extending the life of reactors that everyone thought would be shut down. You even got countries that had long-term plans to shut down reactors that are now going to keep them on, or they're in serious discussions to keep them on. So all of those models that are out there on demand, they're having to be rewritten almost on a weekly basis because of all of the growing interest in nuclear power, because it's baseload power. It can feed into big data, and just national security. All of those are contributing. So demand continues to grow, but at the same time, supply is not keeping up. It hasn't for a while. And when you survey the landscape of what facilities are out there that could be brought back online, or what projects have been discovered recently, or they're being permitted to be brought into production, it's pretty thin. There's not a lot of opportunity out there. And then you couple with that the challenge of getting those facilities into production to grow that supply to feed in the demand. I mean, we've seen over the years, it's incredibly difficult. Go all the way back to 2007, 2008, where spot price got up to, I believe it was $136 a pound. How much production did that really incentivize? Very little to none. And here we're in a really strong market for us as a producer. Long-term prices at 80, we're ecstatic at 80. And but yet you look and see how much production's been brought online globally, even though the price has been at 80 for quite some time. And there's some, It takes time, but not much. So our thesis is we believe the price is going to continue to go higher on the long-term price. There's going to be bumps on the road, higher and lower, especially on the spot market. But we believe we're going to continue to see pressure and to drive that price higher because supply is not keeping up with demand.
But that's a factor of consistency and a sustainability of price to allow miners like yourself to get into production. And it takes these days longer and longer for that to happen. So where's that consistency and sustained price going to come from? It's been very erratic to date. I mean, Andre, you're at the sharp end of that.
Yeah, yes, the spot price has been erratic, but you look at the term price, it's been $80 since March last year. So, but if you look at the commodity industry, you kind of trade in two phases. You trade in the phase where demand hits the cost curve. There's enough supply and it's all about the cost curve. Or you trade in an environment where we are now, which is all about incentive pricing. The cost curve doesn't matter. It's now about what is the price to incentivize new capacity. And John mentioned $80, but there's some developers who've pushed their projects out, basically saying $80 isn't enough. So the incentive price could be higher. But again, it doesn't, supply doesn't meet demand beautifully on a just-in-time basis. So we're going to be off the cost curve and we're going to have to go above incentive pricing for a period of time before you see that supply respond. I mean, there was one question at the conference this week and they said, if the price was $200, how much supply would come? Well, if the price was $200, it's not going to matter in the near term because you need to get organized to deliver the production. So in the near term, the price kind of doesn't matter. You need to get all of those pieces in place to get to deliver the pounds.
Yeah, Andre, that's spot on. I couldn't agree more. Our project at Lost Creek is a perfect example of that. Once we made the decision to go, because the price was improving and we were able to sign contracts, we weren't able to go because the people weren't there, the drill rigs weren't there, the contractors weren't there, the suppliers weren't there. So it took a considerable amount of time, even though we had a permitted project, to just get all of those lined up to get going. So yeah, if the spot price went to $200 a pound today, does that mean that tomorrow there will be no production or more production, despite a threefold increase, twofold increase in price? No, it would take many months, if not years, for a lot of producers. And you take a look at the permitting regime around the world, it takes many years, especially in the Western world, to get a facility permitted. Here in the U.S., you're probably looking for at a new facility no less than 5 years, plus baseline data collection, plus build out, plus ramp up. And if you look at the Eastern world, there are restrictions there too. Look at in Kazakhstan. I saw an article just yesterday. The Budenovskoye, the startup of that is being delayed because of looked like a contractor issue and back and forth between the Russians and the Kazakhs. So there are all kinds of challenges out there that get in the way of production. So even if you do have a big jump in the spot price or term price, industry is not going to respond immediately. There may be a lot of excitement. You may see market caps go up, but as far as production, it takes time.
So the market's not going to be flooded. I think that's what we're saying, because the reaction time, and it's not just the reaction time of the miners, but it's also the kind of build time of some of these reactors, which people are signing off or starting a process with. Do you think the industry as a whole? I mean, obviously, you're looking at your business model. Might actually be worth reminding people of your business model. You have a longer term view on some of this. Is the nuclear sector going to get its act together fast enough for utilities to really pay attention, or do they have to look at alternative options for energy supply?
Yeah, John mentioned China, and why don't we just stop there for a moment? That 10 reactors they've just approved, they're building 26 reactors. It takes a long time to build these reactors, so the visibility on the demand side is quite good, and they've set up the whole system, the supply chain, to deliver those reactors on time and on budget. It's not about building one bespoke project on site. This is about building 26 reactors when the guys that make the concrete, the foundries, all the bits and pieces that go into delivering a nuclear reactor have been set up over time so that they can, approve it, and they know everything's in place, place the orders, keep going. I mean, they're building reactors in 5 to 6 years. And once they, push on the small modular reactor side, I've no doubt they'll do that in a shorter time frame. So it's there are places. The UAE just completed a 4-reactor program on time and on budget. So if you do it multiple times, you can see how your technology and capability develops. So if utilities can see that it's not a case of, well, we're not sure about the demand. You got good visibility on where the demand is. Where the reactors are being built. The surprise on the kind of demand upside, as John mentioned, is the life extensions and countries that have, we were in Spain this week, so they've just had a massive, outage, and everyone's looking at what caused that outage. Here's a country that's looking to exit nuclear. Questions, should we be doing that? Denmark's been out of nuclear for 40 years. They're now thinking about going back into nuclear. You've got Belgium, Italy, countries that all wanted to exit or had exited, re-looking at the space. So, that kind of demand is demand that wasn't seen maybe 2, 3, 4, 5 years ago, and it's suddenly there. The other demand, the Chinese demand, is more visible, and you can see it how it plays out.
We're talking to our utility customers several times a year. We speak with virtually every nuclear utility in the U.S. What they're telling us is they are not just looking at potentially building out SMRs. Some of them are considering large conventional reactors. That's steady growth in the long term. But in the very near term, and right now, take a look at these companies that are getting license extensions, power uprates, higher enrichment of material, longer times between fueling outages. All of those efficiencies and higher production levels, they're pursuing those because nuclear power is very profitable right now. They're trying to grow output as rapidly as they can. So oftentimes when we look at industry growth, we look at the build out of new reactors, SMRs, and conventional reactors. But the truth is, in the very near term, especially in the US, where we still have the largest reactor fleet in the world, the growth is coming on the margins. And those are significant improvements that are upping the output, and they all require additional uranium. So there's growing demand that's kind of subtle. We don't really see it. But it's there, and it's very impactful to the market.
Yeah, it's interesting actually that the advancement of the technology of a very old technology is going to make such a difference. Because I think one of the things that's kind of frustrated me as an investor in the space for the last 5 years is just everyone pointing at different catalyst moments which come and go, and without necessarily too much fact or data behind them, just sentiment. And, one of those obviously most recently has been, SMRs or micro reactors even. You say, what often cited as game changers for future demand. How important is that in fuel terms versus maybe acceptance? Because maybe people start a bit quicker, start a bit smaller with their maybe entrance into nuclear energy as a solution for that, whichever jurisdiction they're in. So, do you value? You both mention it in your presentations. I mean, Andre?
I think it's a game changer technology. Ultimately, what percentage of demand will it be? Maybe it's 20%. It's not going to dominate demand, but it opens up opportunities in countries where big reactors don't make sense. Coming from South Africa, you look at Africa now, there are 14 countries looking at SMR technology, because to put a gigawatt reactor in a country with a small domestic need, it overwhelms the grid. But SMRs are a completely different game. You can put them. Look at Canada. Ontario have just approved construction of their first reactor. You've got a country that's very big. A small population spread about. It doesn't make sense to string interconnectors to connect grid to population. So I think this is a game changer technology, and it's going to find a lot of uses. I kind of think back to the iPad. The iPad came out. I said, "What is this? It's rubbish." It never. But now it's part of our everyday lives, and I think you'll see the same with SMRs, where it's green hydrogen, or whether it's desalination, or whether it's district heating. It's a technology that I think is going to find a lot of applications.
Yeah, I couldn't agree more, Andre. I just came back from the Wyoming Energy Authority. They did an annual conference. I was amazed, incredibly impressed. Here in small Wyoming, very sparsely populated state, you've got companies like BWXT and Radiant that are looking at building out small modular reactors. Radiant, they're going to build them here in Wyoming and then ship them around the world. BWXT, they're working with other chemical manufacturers in the state, looking to build out small modular reactors to power those mine sites and the processing. So the amount of growth in the industry is amazing. It's hard to predict exactly how fast it will come, but you've got some really serious players in the space. Rolls-Royce is another one. TerraPower, also in Wyoming, remarkably, building out a reactor. They've already broken ground and they're getting pretty deep into the licensing process. And then you layer in on top of that the U.S. government. They're looking at Project Pele, which is a small, very ultra small modular reactor, micro reactor that would be used for defense needs, for forward operating bases or for military bases, for an Iron Dome in the U.S. And so you start adding all of those together, and there is a tremendous weight behind that push to get those small modular reactors designed, get them built, get them licensed. The administration here in the U.S. is pushing the NRC very hard to advance the licensing of those. So yeah, it's really difficult to predict exactly when that demand comes, how quickly it develops after that, but it's coming and it should be significant.
So John, I've just, one of the comments I picked up recently is that, maybe DOE and DOD bypass the NRC. Is that something that's been talked about? Is that a possibility?
It's a possibility. I think it's a pretty big challenge. It's simply not how the regulatory regime has been long established in the U.S. And I'm not sure that the DOD really has the people to manage that, but it is a part of the discussion. I was reading this morning, and we've been hearing through the trade organization that we're involved with that within days, President Trump will be coming out with several executive orders that pertain to nuclear power. So I don't know what will be in those, but we expect that they will be very positive, and I expect one of them will address small modular reactors. So stay tuned. I think things are going to change here pretty rapidly in the U.S. Again, the largest reactor fleet in the world.
It seems to me that the big moment in the last few years was the rise in the cost of energy. It started to affect people in their pockets, and it's when people usually start to pay attention. And politicians therefore have to pay attention, and politicians started to be more accepting of nuclear. And I don't think too many people disagree with that one. But off the back of that, what seems to have also happened is it's been more accepted within business as well. You look at these big tech companies now looking to secure their own future energy needs with their AI data centers. SMRs are seen as a very important part of that. And what they bring to the table is a lot of money. Is that all this sector ever needed? Were the utilities holding the US back slightly, John?
Yeah, it's funny. 2-3 years ago, big data and nuclear, we really didn't correlate the two together. But it's amazing how things have changed over the last 2 years. And again, when we talk to our fuel buyers in the U.S. side, many of them are looking to develop relationships with big data. Nuclear power, the technology, goes really well with big data. Both of them need stability, baseload, and big data wants carbon free. And so you put the two together, marry them together, they're just a match made in heaven. Yeah, you could go with natural gas, and that works well. I have nothing against natural gas, but it is a source of CO2, and the big data companies are not as interested in that. So they are really pushing hard to go to nuclear power. We've got a contract right now with Constellation. They're working on a big data center, and so we think some of our pounds from our Lost Creek mine are going to go there. But they're a match made in heaven, and we expect that to continue to grow. That's not a fad or just a short-term trend. That's a long-term trend that's going to benefit the nuclear industry.
And I think, sorry, two additional points, Matt, is one, these guys don't want to be connected to the grid because the grid's unreliable. But also, if you want to make planning easier, you go to very remote places. And that's, again, perfect. You put a data center there and you put a small modular reactor there. The sort of the not in my backyard, you've got to find sites where that's not such a big deal. And again, those two technologies work perfectly together if you can, find these remote sites.
And, there's a couple of different types of big data. I'll do the air quotes here for big data. You've got the systems that you really need to be right there, hooked into fiber, so you can communicate very quickly. And those you would probably want closer to big metropolis areas. But you've also got AI training centers. And those don't necessarily need to have great connectivity with the rest of the world, because you're just simply feeding data into these computers so they can learn. And you can do that anywhere. In fact, probably the more remote, the better. You don't have the NIMBY issue of the not in my backyard. And so that's a perfect place for the small modular reactors. You marry that up with AI learning, and you can put them anywhere, even very remote places, to quite effective.
Right, and like I want to spread this out a bit, to just come away from the US a bit. Obviously, there's been some serious supply disruption of the past, 3 or 4 years. And Andre, you'll know more about this than most. Obviously, Kazakhstan has, in the shape of Kazatomprom, they've experienced some issues around, sulfuric acid shortages and supply chain issues like the rest of the world. Is it still going to be part of, the Western supply coming into the future? When you look at the kind of geopolitical conversations, Trump's trying to sort out, Russia, Ukraine, and the impacts of that, with obviously what's going with China and the US. Does that kind of give us opportunity in the future? Does it drive price in the future? Is it a cause for concern in terms, as an investor, that perhaps we might see a flooding back in the market? How do you view things?
I don't expect a flooding back into the market for two reasons. I think Kazatomprom or Kazakhstan are they're struggling on the production side. If you go back to 2016, they produced 60 million pounds. They hopefully will do that this year again. I think their guidance is somewhere between 63 and 65 million pounds. So, I just don't think it's going to be, again, a case of flicking a switch and the pounds will come. It's really, really hard to produce this stuff. We saw yesterday they announced that, or was it on Tuesday, they announced that they'd signed contracts on their acid plant. They need the acid. Acid's been a problem for them, and it's held back their production, plans and goals. But secondly, again, it was reiterated by them at this conference that they're still very much in the value over volume mindset. If you think that they probably, across their portfolio have the most exposure to essentially the market price, so to produce 5 million extra pounds or take the price down $10, it's quite easy to see how the economics work. So, I think they will continue to look at that. But I think for the West, it's much easier to stick the pounds on a train to China and send it up north to Russia than it is to transport it to the West. So I think increasingly more and more pounds will go to Russia and China because you've got customers there that need it. China need all the pounds they can get, and Russia's got a big export program and are short, physical U308.
Yeah, couldn't agree more. Our modeling, we believe that by the end of this decade, most, if not all, the pounds produced in Kazakhstan are going to stay on the east side of the planet, not come west. Shipping restrictions, potential tariffs. If you take a look at the board at Kazatomprom, they tend to be more and more eastern leaning, not western leaning. You look at the taxes that have been put on the Western JV partners, and it's clear that the lines are being drawn, and there's becoming more and more of a bifurcation of the market. And furthermore, look at the technical side. Beyond just the acid, every commodity, you always start with the easiest, most profitable projects. And that's true in Kazakhstan too. And I'm not saying that their projects going forward are bad. Quite to the contrary, they have good projects remaining, but they're not as good as they were 10 years ago. And so their cost of production is going to come up because of those restraints, because of potential for tariffs and just other geopolitical pressures. So their cost of production is not going to go down. It's going to go up.
So can you talk to bifurcation of markets with your whatever your answer is to that? John's points, Andre.
Yeah, I don't think is Kazakhstan or Kazatomprom actively saying we don't want to support the West. I think it's a commercially very easy decision to send the material on a train east and north. It's economics. It's not politics in those decisions. And I think the current or one of the former CEOs of Kazatomprom said that. It's easier to do. So that bifurcation is just it'll be around logistics and economics, not necessarily around the country taking a particular view on politics.
Okay, so it's not adversarial. It's commercial.
No. Yeah,
it's economic, and that's fine. And I'm accepting of that. But it will have an effect on, I guess, liquidity, pricing, contracting practices, etc. For those who do not have access to that, I mostly Western utilities in Europe and in the US, North America. Andre, I mean,
I think going forward that's a fact. The two operating mines in Namibia, the product already goes to China. So if you look at Western suppliers, it's obviously Cameco, it's the BHP Olympic Dam operation. And then it's this stuff in the US, John, your company and others, but there's not it's not like there's a lot of choice.
Yeah, it's a small universe for sure.
Well, as an investor, I'm kind of pleased to hear that, because I know where I need to focus in the short term and medium term. The other aspect to all of this is the fact that we're struggling with enrichment capacity and conversion infrastructure in the West too. Is there going to be any let up there? Are we going to be able to advance that even if we throw money at it?
Eventually, it takes time. I think Urenco will be taking steps to enhance enrichment, but it's going to take time. It'll take billions of dollars. It'll likely take support from governments to be able to do that. It's a bottleneck. I think the greater bottleneck right now is conversion. We're just severely limited in the West in particular in conversion capacity. Probably not much opportunity to expand that in Canada. Some opportunity to expand that here in the US. But again, it's going to take time. It's going to take the utility stepping up and saying we will support that via long-term contracts. To give the conversion facilities the faith that they need, that the contracts are there, the financing is there to be able to move forward. But those things all take time, and you're just very limited on the number of companies that are going to step into that world and pursue that because of the scale, because of the limited technological know-how on those things. So. Yeah, we'll see. But yeah, it's possible. It just takes years and billions.
Billions, yeah. Do you feel, John, any additional pressure? Like, mining's tough to finance at the moment anyway, right? Conventional mining is tough anyway. You've kind of got this extra layer because it's a very sort of technical metal, but you've also got the fact that this is, we're dealing with uranium here. It has its own challenges in terms of how do you mine it, and what do you do when you get it above the ground, and what do the ports infrastructure need to look like to actually move it from A to B. So it's tough. Is the money there for people who get to the point where they can make a final investment decision when they can? They are in a position to start building this thing, or is that money dried up?
No, the money's there. I mean, we've not been in the market for quite some time and don't plan on being in the market for a long time, but I think the money is there if we were to go out and look for it. There are a lot of entities out there, whether that be family offices or hedge funds, just green energy funds that are really pretty big into uranium. And so if a company has got a real project, they've got the right staff, the right management to run it. They've got an honest shot to get through permitting and to get up into production. The money is there. I think the investors are still ready to go. Maybe a little bit of shine has come off the penny lately just because the prices have been a little bit stagnant. But the spot price has begun to come back up. There's more excitement now. And so what we see, right, wrong, or indifferent, what we see, the excitement in the industry kind of follows along with the spot price. It shouldn't, but it does. And so as that spot price has come up here over the last few weeks from 63 to about $71, $72 a pound, the excitement starts to come back in. You start to see the liquidity in the capital of mining companies, explorers, starts to improve. So yeah, Matt, I'm confident that the money is there. It's not always easy. You got to have the right project, you got to have the right team, but it's there.
The fall off on the equity prices over this last period, whilst the money may be there, it's if you're reliant on equity, it's more expensive now because your share price has fallen. So you have to issue more, and there's greater dilution. So it's definitely pushed some of these things out a bit, because we've just seen equity prices under pressure for a little bit of time now.
Yeah, no, I think that's a fair point. So the question I wanted to ask you, Andre, was really about, so you come from this conference in Spain. Some of the big names were there. Maybe tell us who was there on stage pointing at the audience, saying this is how it is, and who was on the receiving end of that, and why were they there?
So it's the sort of biggest mining conference. Cameco, Grant Isaacs presented. Kazatomprom, their CFO, Merit presented. Then we had a panel which had Cameco, Kazatomprom, myself, and Sprott, and WMC Energy on the panel. So there was a lot of interest in the space. And we had some very, very good, a full day of very good investor meetings. So that there's still interest, and it's interesting because the investors, and we talk to a lot of investors all the time, and there are very few that question the thesis. They all get the thesis. They all understand where this has to go to. Their big issue is timing. Do I get in tomorrow and I get in too early, or do I wait a quarter and miss it? So, they're all looking at the timing of the trade, not the trade itself. I think that's the interesting part.
Yeah, but it's kind of like, I guess all investors have faced that challenge, but for these guys, I'm sort of intrigued with the who are they? Is it the usual suspects who are, we're uranium investors? Are generalists looking in and just trying to understand this thing before they kind of, pull the trigger? Who was in the audience?
Well, maybe the way of answering that is to look at our register, because that's kind of reflective of who we talk to. So if you look at our share register, we're 50% North American owned, which is interesting because we started our journey being 50% UK, and we're 30% retail. We've got 4 big retail platforms in our top 10. And in our top 10, we've got generalists. We've got specialist commodity guys, we've got some hedge funds, we've got retail, we've got some pension funds. So it's a very broad spread of people who are looking at this space. So it's hard to say it's only this one segment. It's broadened out completely.
Okay, here's one, Andre, just sticking with you for a second. Okay, because I think I've talked about this in the past. You got players like yourself and Spurt and some of the ETFs, like Global X, etc. You guys have bought millions of pounds in the marketplace. Do you think that you guys bring or create a price stability and transparency, or is there some kind of distortion there in the market when you're talking to generalists and investors? What do they think? What do you think?
I don't think people see us as we're buy and hold, and certainly when Sprott went through their aggressive acquisition phase, they hoovered up quite a lot of material, and what it has done is thinned out the spot market, and when there may have been large pockets of mobile inventory, that's gone. And it's not just a function of what Sprott and ourselves have done. It's a function of how the market has gone. The UXC comment at around the time of WNA 2023 still rings very, very true. The era of excess inventory is over. When we entered in 2018, the spot market was oversupplied. It's not today. So you've had this transition, and it's not just us and Sprott. It's inventories being drawn down, secondary supplies diminishing. You're in an undersupplied market at the moment.
But I think John would quite like the behavior of yourselves and Spurt, etc. In fact, this kind of evolving role of funds and holding companies and inventory strategies that are happening. You'd hope that the utilities would change their procurement behavior, but I don't think they have. Have they?
Largely haven't. We see that maybe around the margins. I won't name names, but there are a couple of utilities out there that have been a little more commercial. But by and large, they don't seem to be changing their strategy. They love the stability. They look long term. That's where their contracting is, and they really don't dabble in the spot price. That really has not changed. So the utilities really are not the ones that put pressure on the spot. They put pressure on the term market.
Okay. I mean, you two have been in this space a lot longer than me, and probably a lot longer than a lot of people listening to this. What signals should we, investors, look for to determine whether this is a kind of cyclical rally or the start of a sort of structural re-rating in uranium? How do you view it, Andre?
I think we've been part of a structural re-rating. If you look at, there's a lot of volatility. Again, when we started, the price traded 24 to 26 for a long time. Then it went up to 32, 35, then it was in the 40s. And then we had this very rapid run up from, sort of September 23 through to January, February 24. It went from 65 to 107. It almost went too fast, too quickly. So, I must say, there was an expectation it would come back. I just didn't think it would come back below 80. The fact that it dropped below 80 surprised me. But, then we had the Russian ban, the counter ban, and the whole tariff issue. So huge amounts of uncertainty. And when all of this uncertainty is out there, I think the utilities just step back and say, let's just wait and see how this plays out. So I think, in large part, the uncertainty has created, some of these issues. So, the overall trend is still, upwards, but it's just, it's up, back a bit, up, back a bit. And it's not unhelpful to have some stability. If the price runs very, very hard, very quickly, I don't think that's hugely helpful.
Yeah, I agree. We need stability, and the term market is still, very strong. It's been at 80 for a very, very long time. It's incentivized some production, like for us at UR Energy, we're a relatively low cost producer. So that gets us in the market. But even once we work our way through some of this geopolitical instability, which hope we do that sooner than later, the fundamental gap between supply and demand is still there. We don't see that changing. We don't see big data and their demand changing. We don't see the interest in carbon-free baseload changing. So all of those are really good tailwinds for the industry. So I think we're not in a cycle here. I think we're just in a fundamental change in how the world perceives and demands nuclear power, and that's going to continue to put pressure on the price.
And what do you think, and Andre, for you, when you're sort of looking at the market, what do you think the most sort of overlooked or underestimated risks are in the uranium investment thesis at the moment?
I just go back to my starting comment around supply. I spent 15 years at BHP. I spent the last 25 years, in the industry, really on the production side. It's really, really hard to take stuff out of the ground. You've got weather events, you've got labor events. You look at the Paladin 1 in 50 year flood event. It's these things happen. So when people say, well, supply is X, then you think, well, that's a P50 outcome. There's as much chance of it being X plus as X minus. But in the mining industry, that's not the case. Your X is probably, you've got, a 10% chance of going under and a 10% chance of going over and a 90% chance of going under. It's not a P50 outcome. And that, I think, is probably, for me, the most underappreciated aspect.
I couldn't agree more. There's a lot of noise out there. There are a lot of ancillary factors that affect the spot price in particular, give it volatility and big runs up, big runs down. But fundamentally, what's going to drive that market going forward, Andre, you've hit on it, that's the biggest risk, is supply. And can the miners keep up with the demand? Now, I contend it's going to be very challenging for us to be able to do that as a global industry.
I go back to my time, when I was sort of in the iron ore industry, and, the iron ore price was $10 and then $20, and then it went from 20 to 180. So, and it took a long time for the supply to come, and supply will come. It always does. But it's the time factor that's important here. And we're in that phase where, the supply is going to take time to come. It will come, but is it going to be mid next decade or early next decade when we get meaningful supply response? I just don't see meaningful supply response before the end of the decade.
So, in a scenario like that, where there's a kind of price response, do producers who are actually producing cash, do they get disproportionately rewarded, or is it the phrase I absolutely detest? All boats float on a high tide, i.e., sentiment drives valuations for businesses. I mean, what do you think, John? I mean, it's going to affect you positively, negatively.
Yeah, I mean, certainly there's an argument out there. Should you go into production now? Should you sign contracts now, or do you wait because everyone believes the market's going to go higher? Our contention is we want to lock in good revenues now, because as we get ramped up to full production, we're going to be profitable now. As an in situ miner, we've got holding costs and we need to offset those costs. So if we can make money now, we believe we should be making money now and not wait for a hypothetical out in the future. So, I mean, that's our strategy. We want to be a producer. It gets back into that being able to respond to the market. Let's say we don't go into production, or company X doesn't go into production because they believe the price is going to be higher 5 years from now. Well, there's a burn. You're burning cash for 5 years. And then once you get to that 5 years and all of a sudden the price goes up, let's say you're right, it is very difficult to respond to that in a timely manner. The world is full of examples, not just in the uranium industry, but in other commodities too, where companies have played out that strategy, expecting the price to go higher and will respond with production when the price goes higher. The price goes higher, they can't respond. They don't have the people, they don't have the technology, they don't have the permits, they don't have the wherewithal to respond. Price goes up, price goes down, they were never able to respond. We don't want to be in that position. That means we may change how we contract to give ourselves some opportunity for blue sky. We may leave some things uncontracted to be able to have that exposure. But our philosophy is, if you're profitable and you have good profit margins and the ability to do that, there's no time like the present. The future is unknown, it's uncertain, and so we'll take that bird in the hand instead of the very high risk of two birds in the hand in the future, where you're burning cash between now and whenever that time is in the future.
I mean, a tide floats all boats, but it doesn't give everyone the same margin. If you're a low cost producer and you have a high tide, you just make more cash than everyone else. So yes, it gives those that wouldn't have been in production an opportunity, but it rewards those that are in production with good projects and good cost base.
Can you talk to it in the sense of your business model, Andre? Because obviously very different from actually pulling stuff out of the ground. You're stocking up, and when the price goes up, your company becomes very valuable. So explain how it all works.
Yeah, it is just enables shareholders to express a view on the commodity. You can hold gold at home and you can hold copper at home, but you can't own uranium at home. So that's really where we are. But come back to my original point. If the spot price is 70, I could see it doubling. We're not at a point where people are saying, is the peak 70, 75 or 80? I think, a lot of people still think we're halfway through. And this conference I was at, the Bank of America, their 27 forecast is $135 a pound. That's almost double from where we are today. So it's
sorry,
not,
say that again. Their forecast was?
So their price forecast for 2027 is $135 a pound spot.
Okay.
So and there are a lot of folk out there who have strong views on the price, and it's not it's going to be 72, 73, or maybe even at 80. We're talking the possibility of a doubling, and then if you do have a supply disruption in a very supply stretched commodity, the price could almost be anything. You could have a massive price flyer.
Well, it raises an interesting point. It's like, obviously these big banks have been out of the space for a while because it's, uranium is a relatively small sector within a small sector of mining. Do they fully understand the kind of supply crunch that's coming down the line? Because for me, we look at the kind of Red Book, which came out a few weeks ago, and if I believed every single company that said it's going to produce when they said it was going to produce, I'm still don't think we have enough uranium. But I take the other view. I think about 40% of them won't, or more, won't produce anywhere near what they say they will, and they definitely won't produce it when they say they will. That creates a very, very different and I guess violent outcome for price. How do you view it when you sort of look at all of these producers and like John? I know we've talked about it. But so Andre, when you look at the sorts of numbers that people are talking about, are you a believer?
No, because people confuse reserves and resources. Yeah, a resource is doesn't mean it's going to turn into pounds, because there's an economic model that underpins a reserve. So there's enough uranium, there's enough of everything. It's just, what is the cost to produce it? And today $80 doesn't incentivize a huge amount of production. So the price has to rise to the appropriate point to incentivize sufficient production to meet demand.
If you just take a look at history. I don't care what decade you look at in the uranium industry. I don't think there's a decade in memory where 100% of the people that said they were going to be in production met all of their production targets in a timely manner. It does not happen. Not just in uranium, copper, gold, name your commodity. Mining is tough. Uranium mining is even tougher. Again, I'll go back to 2007 when the spot price got so hot. A lot of grandiose promises. In fact, I think at that point there were about 500 companies that were formed, and they described themselves as uranium companies, exploration, development, mining. How many of those survived? I think probably less than a dozen survived. How many got into production? One or two. So I think, sometimes they say you shouldn't look at the past as an indication of what's going to happen in the future. But in this case, I think you can. All the same fundamentals are there, permitting, capital, shortages of supply, you name it. All of those factors are still in play. So it's going to take higher prices and for longer to be able to incentivize that production to come into the market to fill the gap.
It's quite fun, going to these conferences. So I was in a conference in Singapore in 2023, and I would say 90% of the companies there were lithium companies. Then I was at a conference, in February, and probably 60% of the companies were gold companies. So, it's kind of, which commodity is flying, and then suddenly, everyone has projects in that commodity. So you have to be a little skeptical.
PDAC is the same way. You go to PDAC every year, and it's pretty obvious what market's hot based on how many booths are set up and what they're advertising.
Have I got an antimony project for you guys? No, I think that's kind of where we're at the moment. Look, gentlemen, I'm just conscious of the time now. We should probably wrap it up there, but that's been a super conversation. Why I think it's a super conversation is it's from people who have created value. Look at the market caps of your companies, look at the valuation of your companies in a space which has been really difficult for the last 4 or 5 years. And you're 2018, weren't you, Andre? It's been a difficult time, but you've still managed to grow the value of the company. So I'm listening. I'm interested in what you value and what you say is important. So, gentlemen, appreciate time. Maybe let's just sign off with, and Andre, I'll start with you. Why should people watching this, listening to this, reading about this, invest in your company?
You say the last 4 or 5 years have been difficult. That they have at one level, but if you look back, we bought our first uranium at $21. We're now sitting at 70, and if banks are calling 135, this is going to be fun. That's why people should invest. It's not trying to get another 5 or 10%. There's a real chance here the price doubles, at least.
Yeah, and right now, Uranium, we're tremendously undervalued. And if you're looking to invest in a uranium miner that's actively mining right now, ramping up production at one facility and building out a second, and you want exposure to that uranium market with a company with great contracts in place through 2030, Uranium, we're one of the companies, very few companies that should be considered. So we'd encourage people to take a look at us and give us a shout. Love to talk some more.
Gentlemen, thank you very much for your time today.
Yeah, thank you.
Thanks, Martin.